Welcome back after the break to Insurance Mantra in our Expert Speak segment. Today I am joined by Anurag Rastogi, former ED of SDFC Ergo General Insurance, currently Vice President of Institute of Actuaries of India and advisor to Deloitte India. Thank you so much, Anurag Rastogi, sir, for joining our Insurance Mantra show.
Thank you very much. My pleasure.
Okay, sir. So, sir, in today's our Expert Speak segment, we are focusing on health insurance, and we have a lot of policyholders query related to health insurance. And to begin with, I just want to understand from you, policyholders are generally confused in some assurance for their health insurance policy. So, according to you, how much sum assured is sufficient for a health insurance policy, and how one should decide on sum assurance or sum assured for their policy?
Sure. A small clarification. I was not the executive director. I was president and chief underwriting officer in SDFC Ergo. Coming to the sum assured, Anurag, I think the bare minimum sum assured that anybody should buy today is 5 lakh, because even the people below poverty line are given a 5 lakh cover under Prime Minister Jan Arogya Yojana. So that is the bare minimum that everybody and anybody should have. Now, if you look at the inflations in the healthcare costs, what is worth 5 lakh today, in a couple of years, you will realize that the 5 lakh sum assured is not adequate. So people who can afford, I will recommend them to buy 10 lakh, 20 lakh, 50 lakh, as much as you can afford, because the costs of treatment have become very prohibitive. So even a 20 or 50 lakh cover is really not too much. For myself, I have 1 crore cover. And I believe that, the way the inflation is going up, even this cover will become inadequate in 5 or 7 years from now. Number one. Number two, problem is that you buy a cover today for, let's say, 10 lakh rupees. God forbid, something happens to you. At that time, increasing the sum assured will become very difficult. So if you can afford, you must buy as large a sum assured you can buy. I believe that anything between 50 lakh to 1 crore is quite adequate for from now to next 10 years.
Sir, 50 lakh to 1 crore is for those who are starting their employment initial years, or those who don't have that much of earnings. Then how they should ensure that, okay, that much minimum insurance coverage is must?
So I said that 5 lakh is a bare minimum for anybody and everybody. And those who are starting the job today, if they can afford, they should have at least a 10 lakh cover. Because 5 lakh is something that people at very below poverty level are buying today through the PMJAY. So 10 lakh I think should be bought by all middle class people, those who earn anywhere between 25,000 to 50,000 rupees per month or more. They should look at least a 10 lakh cover. And I'm talking about a 10 lakh floating cover for the family. You start buying when you are single. As soon as you get married, your wife also get covered in that. And when you have child, then child also get covered in that. So a floater cover of 10 lakh for a middle class family should be, I think, is very, very important today.
Okay, sir. Now my next question is, sir, lifestyle diseases like diabetes and hypertension are becoming increasingly common. How do waiting period for such pre-existing condition work, and what should consumers be mindful for before they make a claim?
The first thing I would say is that people should buy the health insurance policy when they are young, when they don't have these problems. These problems start typically from 30, 35 years onwards. So as soon as somebody takes up employment, he must buy health insurance cover and must continue to renew that policy without any break. In that case, all these diseases will be held covered because they'll not be pre-existing. If somebody wakes up or decides to buy a little later, when he has already contracted some of these diseases, then today there are plans in the market which cover these diseases from day one. So you don't have to have a policy with a waiting period. Of course, the policy with a waiting period will be a little cheaper, but I would recommend going for a policy which covers it from the day one by paying slightly higher premium if you can afford it. If you cannot afford it, then your policy go and look at the policies, do some research, figure out which policy has the least waiting period. Anything between from 1 year to 4 year or 5 years, buy the policy which has the least waiting period so that you do not remain uncovered during the waiting period for those particular diseases.
Okay, sir. And sir, for individuals who already have pre-existing illness, what should they do both at the time of buying the policy and later when filing a claim?
I think the golden rule is disclose all the pre-existing illnesses to the insurance company with full honesty, because this insurance contract is based on utmost good faith, and if the insurance company discovers later that somebody had a pre-existing disease and it was not declared, then the claim can be prejudiced, it can be repudiated. I would recommend that they must declare all the diseases that existed when they are buying the policy. At the time of claim, they just have to make sure, so there's nothing specific to be done for pre-existing diseases, but they just make sure that they keep their insurance company informed before they consult the doctor or before they get admitted, and then insurance company takes care of the entire claim process in a very smooth way today.
Okay, sir. My next question is that people usually tend to get confused between cashless versus reimbursement claim. So, could you explain which option work best and what customers should keep in mind?
From a consumer perspective, cashless option is the best, and that is why the Insurance Regulatory and Development Authority has also emphasizing that insurance companies must have cashless, deals with all the hospitals. So the policyholder should select an insurance company which has the widest network of hospitals, whereby he can get the benefit of cashless settlement. That is the best because he does not have to spend anything, or he has to spend bare minimum amount that is not covered in the policy, and the entire amount is paid by the insurance company to the hospital. In case he is not able to go to a hospital which is in the network, then he must make sure that that hospital is not in the declined list of the hospitals of that insurance company, and he must maintain all the documents, all the prescriptions, all the diagnostic tests, all the medicines, all the procedure, all the bills and cash memos, and submit it as soon as to the insurance company. Payment of reimbursement claims is also not difficult, and insurance companies pay these claims fairly fast.
Okay, sir. Uh, but sir, one should go for cashless. That is advisable because you don't have to worry about all the documents and all the diagnostic reports and all.
Preferred option is cashless settlement, but situations at times arise when a problem occurs all of a sudden and there is no network hospital in the vicinity. At that time, for the sake of patient, the relatives take him to the nearest hospital, whichever is available. So the first option is network hospital where cashless treatments are allowed. Second option is reimbursement if you are not able to go to a network hospital where cashless is allowed by the insurance company.
Okay. But sir, most of the complaints means our family members, relatives, friends, they often say that for cashless reimbursement, if their overall bill is of 1,50,000, hospital will reimburse around 1 lakh only. There are some sort of deductions. So what should be done to avoid these deductions?
I think most of these problems arise because people do not read their policy documents. A policy contract, insurance contract, always will have things which are allowed, things which are not allowed. Some of the products will have room rent limits. All the products will have some consumable items which are not allowed as permitted by the Insurance Regulatory and Development Authority. Some policies will have some limits as up to which they will allow either a room rent, or there will be limits on the different treatments. So people don't read the policy, and that's why these deductions happen. So best will be to read the policy carefully. And let's say that the policy allows room rent up to 5,000 rupees. Then the policyholder should make sure that he takes a room which is the room rent is restricted to 5,000 rupees or less. What happens is that if he takes a room which is 10,000 rupees per day, then the insurance company will apply proportional deduction on almost all treatment costs in that hospital except medicines. So doctor's fee will be reduced by half because the room rent that the customer has chosen is twice that was allowed under the policy. The diagnostic test will be deducted 50%, operation theater, any ICU treatment, everything will be. So these deductions add up to a large amount. So it's important that the policyholders stay within the limits that are allowed by their policy.
So the policy holder should know the fine prints of the policy also, because otherwise they will avoid. They will end up paying more, and the deductions will happen. So fine prints should be known. What's your room rent limit and other conditions in the policy. Thank you so much, Anurag Rastogi sir.